Hello traders everywhere, Adam Hewison here, president of INO.com and co-creator of MarketClub with your video market update for Tuesday the 5th of March. Well, I guess sequestration didn't much matter to the markets as we're stronger in all the indices today. The Dow, record highs today, new exciting highs. We'll be looking at Google. Is it time to buy that stock? Is it time to short Apple or is it too late there? And we'll also be taking a watch on gold. So let's get started right away and start looking at our portfolios, and we'll start with the S&P 500 right here. And starting with that, today we had some new signals that you can see all of our trade triangles are positive, and we scope this, and let's just do 3 months. You can see a big update today. This is capable of taking the market up to the 1550, 1560 level, which is our target zone, but it could be much higher now simply because we've had this pullback, and this gives us another range of probably 40 points. So I think we'll take that to 1570 on this market, but definitely it is not a time to be short the equity markets right now. So let's move along to our next market. The Dow has been bullish since the February 25th on our short term, and longer term we go all the way back to this January of 22nd. So we are still bullish, new high ground, 14,600, that's our target zone on this market. So let's see how that plays out. Now, the one laggard because of Apple has been the NASDAQ, because Apple controls about 9-10% of that index. And that's had a harder time going up. So we'll take a look at it today when the chart comes up. So here we are. The weekly kicked in today, so we do have a plus 100 on everything else. If we scope this out a little further, though, we can see that we are looking good on this front as well. So generally speaking, we are going to see this market trend higher in our opinion. We've cleared this high here, which was a concern of ours, certainly. So new highs looks very positive all around. So let's go to our next market. This is crude oil. Now, crude oil is really struggling. It has been for quite some time. We were under pressure earlier, and let's just go to 3 months on this one, get an idea. So you can see we really can't get anything going on the upside, very oversold. It's going to have to do some base building here. However, it is at an area I think is going to probably begin to find some support. What's interesting, Transocean, which is rig, is basically seems to be bottoming out and made a turn, and that may be the first indication that demand's coming back for this market. But right now, technically, this market is in a downtrend. In the intermediate and short term, longer term, it's still positive. So let's see how that plays out today. Moving to spot gold. Now, spot gold is trying very hard to bottom out, but it's not there yet. But you can see, just based on our trade triangles, everything's negative, but we're starting to see some sort of sideways pattern. You can see there's the low right here, and we sort of been moving along here from right around the 1550, 1560 areas sort of support, and we run into really rock solid resistance around the 1620 area. So that's the concern we have. So 1550 on the downside and 1620. So it's about a $70 range right now. Now if we break through this 1550 area, then we're probably looking at 1500 on the downside. So let's see how that plays out. The trend clearly down. No reason to catch any falling knives on this one. Let the market play out. If it does decide to go up, we'll catch our move on the upside. But we've really caught this one well. 1672 on the monthly, 1653 on the weekly, and here we are. We're currently trading at 1557, almost $100 profit in the monthly, and approximately $80 profit in the weekly. So looking very good on that front. So let's just clear the screen and go to our next market. The next market we're going to be looking at is going to be the euro. Now, the euro has sort of flattened out around the 130 level. You can see here, you can see where we basically kicked in here at 133 and change. It really has sort of been below the 130 level, but briefly it came back up. I don't think it's closed below the 130 level, certainly in our time zone, and we're very flat in the oversold condition. You see, really, we've been just sort of flat here, really nothing going on, and we keep going down. So trend is down. Longer term, we're still positive on a monthly, but at least you have to respect the intermediate and the weekly. You should not be in this market if you're a long-term trader because the monthly is up and the weekly is down. It's for really a longer term play. But if you're a short term to intermediate term player, you should be short this market, and you should be short from this 133.17 level. So let's clear the screen and go to our next market. And the next market we're going to be looking at is going to be the Apple computer, down 40% from the highs. Now, this is what I want to share with you. When we were up here, let me get my illustrator on. Here, target zone for everybody, $1,000. Well, I shouldn't say not for everybody. For a lot of the big companies, that's what they were targeting Apple at. I remember this distinctly. $700. We're going to go to 1,000. That was the mantra. Everything. Well, look what happened. So at 587, which is right here, this thing kicked out a major. That was a major exit. That meant the trend was turning down. It had turned down at that point in time. Now, if we take this off the screen and look at this market on a other basis, we can just go to a weekly, put that in, and you can see the weekly actually kicked up right here at 656, only like $50, 10% from the highs. It kicked out. You should have been out of the market at this point in time, and you should have been on the sidelines. This was the key. Right here on November 2nd, 587, get short or be totally out of this market. Now, we've seen a little bounce today because of all the enthusiasm that's coming into this market. But generally speaking, I think this market can go down to around $400 still. I don't think it's out of the woods yet. I could be wrong, but the trend is still down. You have a little bit of a formation going here, a measurement formation. So let's just close that in a little bit here. And let me show you what I'm looking at. So if you just take a simple line, just draw it across here like this, you can see basically we broke through it. If you measure from this line here, 440 up to the 480 level, and you subtract 40 from 440, it takes you down to $400. So I think that's going to be our target zone for Apple, $400. We may not get there, but the reality is that's technically, it's still possible. We have not seen a turnaround. Everything is screaming bear trend here for Apple. So let's just clear the screen and go to our next market. And of course, the next market we're looking at is the nemesis of Apple, and that's Google, and symbol GOOG. Now, Google has done a lot of things right. They own 70% of the smartphone market. You can see it's a new high today in this market, and we're looking for this to go higher. Now, this is what the point I want to make. Markets always appear to be the most bullish at the very high. Okay, so the question we have, and this is what we're measuring here on Google, is to take a very simple line just from here over to here and from here to here. So we're looking at 640 on the downs here on the lows, and we're looking at 770, let's say, on the highs. So it's 130. So you put 130 onto this, gives you, guess what, 900. I don't think Google's going to hit $1,000. And at $900, I think everyone's going to be saying Google's going to go to $1,000, just like Apple was going to go to $1,000. That's pretty much when everyone's bought and there's no one else left to buy. So be wary of that. Take a look at our Traders Whiteboard, lesson number 6. It explains exactly the 7 sequences of the market and how you need to follow those really unrefutable laws of the market, which basically means the market goes up, has a certain sequence, and then all of a sudden everyone gets bullish. There's no one left to buy. So be wary of that. So let's just clear the screen off for a second and go to our market, and let's see what else we have left on the table. I think the last one we have is another. Nope, that's it. Hey, I'm Adam Hewison from MarketClub. I'm glad you had a chance to stop by. It's been fun talking about these markets. New highs, always exciting. The trend is your friend. And just look at how this market showed us today, right here, with these yellow squares right here, yellow triangles. That was the indication. So again, MarketClub, the trade triangles work. If you're not using them, please check out our portfolio page. And let me just squeeze this out for a second. And let me just go to our homepage for a moment, and you'll see the portfolio page that we have, which is very, very successful. And here we are. You can see all the portfolios. We have the global strategy portfolio. That's for ETFs around the world. It's BRIC A, that's 5 basic currencies and commodities countries, that we track. The perfect ETF, which is a super portfolio for conservative investors, ideal for IRAs and so forth. Then the World Cup portfolio, which has basically blown everybody away. So you can check those out. Very simple. And also we have our top markets every day. So Adam Hewison for Market Club. I'll be back tomorrow. Have a great trade.